Good morning, welcome to the show on this Thursday morning, slightly cold, wet Thursday morning. I'm Chris Beecham, I'm joined once again by Axel.
Good morning, Chris.
How was yesterday? Was it you yesterday?
It was me yesterday on my own.
Was it on your, were you on your own? Again.
Yeah.
How was it?
Yeah, it was fine, I think.
Yeah. Good stuff. What have we got this morning? What have we got going on this morning? Let's do oil prices.
Oh, yes. I
Not
looked
because,
smug
not just
yesterday
because of you, but
because I was saying trade of the week was to go short oil, and it did look good yesterday. But actually, if you look at my chart now, it's the opposite once again, because basically Donald Trump and his warships.
it's not even tweeting, is it? It's actual
No,
news.
you're right.
Axios, reports in Axios and CNN this morning saying they're essentially ready to go, as far as we know, although he hasn't yet fully decided. But that was the thing, wasn't it, for oil prices?
Yes, and also basically the Iranians doing joint navy operations now with the Russians and the Chinese, and it's all looking a bit dangerous at the moment, which is why you can see here from yesterday's sell-off, suddenly we returned and had a 4% rally. And interestingly enough, from a technical perspective, what we're also seeing on this price here is that WTI crude oil is now breaking through its June 2025 to February 2006 downtrend line. You can see we've got 3 touches here, and we are breaking through there. So it does look that as if these heightened geopolitical tensions are going to push the oil price above the high we saw back in January. So that was around $66.30. That's what my stop is. And above there, basically the next upside target is the high, sort of going back to mid-July of last year, 68.50 or so. But yeah, it's definitely looking more bullish than bearish here. And once again, heightened geopolitical tensions are pushing the oil price higher.
Now, some people might say, and I will play devil's advocate, I don't think it myself, but some people might say, well, this invalidates technical analysis because you had a setup and it was working, and then something happens and it caused you to be stopped out.
Yeah, but that's totally fine, because basically what technical analysis is just trying to get the odds in your favor. And we had a setup, and it did at first go my way, but that could have just been driven by fundamentals. And at the end of the day, let's face it, the charts are just showing you what the price action is doing. The price action is nothing else than buyers and sellers, and they've got all the same information available to them.
I say this purely to be...
Yeah. And basically, of course, markets are driven by fundamentals. Yes, I mean, the advantage of technical analysis is that you know exactly where you're wrong. In this case, I know what my stop is, therefore I can decide what my downside is, and then the flip side of that is you try to make more on the upside in case you get it right, and you try to get the odds in your favor. Now, this year hasn't started well, but last year was the same. I think we had 5 losing trades at the beginning of the year. This year isn't quite so bad, but it's not looking great with regards to trade of the week. But having said that, over the last 3 years, we made an average 25% still. So it's just a question on average making more than you're losing. And I, to be honest, found these markets quite difficult at the beginning of this year because I always backed the wrong horse. That's me. That's not technical analysis.
Let's call you out. Full disclosure, I was long crude oil into Wednesday, and then I was stopped out. So if it's bad for you watching it, stopping you out, it's worse for me because I was the right way around, and it doesn't matter. Because
and you had real money on it, didn't you?
I did have real, not very much at all, but enough to just, and because oil is so volatile, it's just, I have to now wait for it to see what it does, because this is the problem with trading oil, I think, isn't it? You don't, with indices, moves don't tend to be in the 4% range, but oil, certainly at the moment, is definitely moving that. If you look at these candles on your chart, on my chart, either one is fine, really. Those wide candles, if I get my, always good to have the...
Yeah, you can see basically a lot of volatility because these candles are all very, very long.
Yeah. So you had sort of late January, you had 4% move, 2% move, 2%, 3%, 4%. So you've had, and of course, this comes barely a week after a 3.5% drop.
Yeah, exactly.
So this is the kind of world you're living in if you are trading something like crude oil. I think so much of the time in trading, people talk about, oh, if you'd bought it here and sold it here, or vice versa. But it's often the journey. It sounds very philosophical, but it's the journey that is more important, or is often more relevant to your experience, because yes, anyone can look back and say what you would have done, but it's what happens on the way that tends to be
Exactly.
the major determinant of how well you do.
Now that we're breaking through that downtrend line I just mentioned from last year, basically, if you want to go long now because of that downtrend line break, the risk is here. You should actually wait for a close to be happening above that line, but maybe that close might be at $68. So do you want to do that? If you go long now, well, again, as you just said, Chris, your stop would be below the low we saw on Tuesday, but that's at $61.75. So that's a long way away.
Yeah. I was looking, I thinking, no, it's too rich for my blood at that point. And that's often what you get with commodities, isn't it? You just have to put your stop so far away for common sense reasons that it doesn't really work. It's not working from my perspective. And of course, if it does go back down again, because this is the risk that you're trading oil at the moment, he could announce tomorrow that they're not going to attack Iran, the price would go right back to where it was.
Yeah.
And put it back in play. If that were to happen, let's say nothing happens over the weekend, maybe he comments that things are going well in the talks and it reverses, what would be your way of looking at that in terms of trading crude oil, let's say?
Well, I've got my stop loss in place. I know where I'm wrong. That's the high from this year. If we manage to stay below that today and into the weekend, then yes, the same trade would be on as before, because basically we're failing at resistance, which is what I thought we were going to do. And, we're holding at support though, and I thought that support would break. But clearly so far I've been wrong. So it wouldn't change anything. But in the meantime, if it gets stopped out, that's why I've got a stop in place.
That's why they're all there.
Yep.
To stop the losses from getting worse. Because the worst thing would be to be short and still be short. And if it goes now another $10 higher or whatever.
Yeah, and also to flip and flop. A lot of people change their minds all the time, depending on the news flow or the charts, etc. You don't want to do that either, because you're just over trading, and that's not healthy either.
Exactly.
And as you say, with hindsight, this oil price looks really, really easy to trade. At the beginning of the year, all I should have done is gone long. My view was still short from last year. And look, with hindsight, it looks great and easy, but when you're on there every Monday, it doesn't always look that clean cut. Hindsight is a beautiful thing on the chart, especially when you see patterns that might not be there.
It's very easy to watch in hindsight and say, this is what you should have done. This is why I said this with Angeline. If you can do this on the chart, and everyone thinks I'm mad when I suggest it, but if you get rid of all the data and try and put yourself in a position of what happens next, because you look back and you see what's happened, but it's just, you have to put yourself in a position of what's going to happen now.
Yeah.
It's much harder to do. That brings to the end this therapy session, okay, of the week. So I wasn't picking on acts of delibery for that, but I thought it was very interesting that you've had these moves in oil this week, and likely to continue, I should think, from what we're seeing. But let's look at the movers this morning in London. Mondi, star of the day, up nearly 5%. It's packaging, yes, sustainable packaging and paper. So a 5% move there, recovering from these, I don't really look at the share price that often. Wow. This is quite the steady.
It has come down a lot, hasn't it?
That was the low.
And again, the danger here is, people think, oh, yes, we're forming a bottom. We may, and we are short-term forming a bottom, but you've seen a lot of these short-term bottoms form over the last few years. And yet the share price continues in the direction of its overall trend, which is down. Yeah. So, it's probably less risky to sell against resistance on moves higher than trying to pick a bottom and then trade against the major trend. But yeah, short term, it does look as if we could go slightly higher. But again, if you look here at the lows that are on your chart in April and sort of October of last year, they may soon cap the upside. So you just have to be very careful, really. I prefer, as you know, to do trade and invest in the direction of the trend, not against it.
Exactly, because everyone wants to find the lows or the highs and take the trade and become a star in that sort of Michael Burry way. They do well. So just looking at Mondi's numbers, I confess I don't look at them very often. Revenue was up 3%, underlying earnings were down 5%, pre-tax profit was down 29%. So it's interesting to see them up 4.5% in early trading. Whether this is hope springs eternal, but you've been here before with Mondi several times since the beginning of the year, and it just continues to worsen. So it's interesting. I think you often see this though more on the share prices. They're going down a lot. They tend to, when they recover, even in the short term, it tends to be brutal.
Yes.
And there's the hope. But having said that, there are your candles where reality clearly intervenes. 11% down late July, and then 15% wiped off the share price at the beginning of October. So we are back Yeah, so that's, as I say, those are the April lows. Watch and see what happens around those numbers. The other big name this morning reporting, well, two other big names, let's be fair, but the biggest one of all, Rio Tinto, if I can find where the share price actually is this morning. It is down 3.5%, 3.6%, but obviously this comes, it was I'm not sure if it was a record high for Rio yesterday. Yes, it was, I think, or just certainly matching the record high. So perhaps not surprisingly, as ever with a lot of these mining stocks, it's better to travel than to arrive at the moment, because as we've been saying with defence, the good news is in the price. And what that means is it just you having to beat these expectations. We know Rio Tinto are posting good results. We can all see the commodity prices and how they're performing. We know this will feed through into their numbers. It's a question of where do we go from here?
Exactly. And here we also saw pre-tax profit come in lower than expected. So that's perhaps why it's coming off a bit. But yes, you're right, Chris. I mean, the question is, where do you get back in again if you believe that the share price is going to continue to rise? But that will also depend on whether commodity prices will continue to advance again after this shocking decline that we saw earlier this year, and the silver price coming down 30% in a day. And that quite often sort of knocks the wind out of a strong uptrend, especially if it's sort of exponentially rising, as we have seen it do towards the end of last year.
Yeah, it's just marched higher and higher and higher. Is it very little in the way of a little bit of volatility early November, but since then it really has not looked back. It lasts 2 or 3 days at most, and then off it goes again, really, which is in one sense a very strong sign. But as we've said before, when you get these kind of distances between prices and moving averages, there's no law that says the price has to respond at any point. Is that it doesn't? The price, as often I've been told, doesn't care about any indicators. The indicator is not a reflection of what should happen. But you're simply looking at that, and again, without wishing to sort of, we can see a pattern. It's simply looking and thinking, gosh, it looks awfully high at the moment, and knowing it could go higher. But it's that kind of, again, if you were going to buy it here, where on earth would you put your stop at this point?
Exactly.
On your time frame?
And also you've got stochastics on here, and you can see that they are falling. So basically you've got negative divergence because you're making higher highs on the price chart, but yet you're making lower highs on the stochastics. And that does, at least short term, quite often lead to a retracement. The question is how big that retracement is going to be. But right now it looks a bit frothy, and we did say that already at the beginning of this week, didn't we, with regards to miners in general.
And you could have said that about Rio for the past 3 months, and it still continues to push higher. And this, at some point, reality often does tend to intervene, which is often the way of markets. The other numbers this morning from the FTSE 100 was Centrica, or British Gas, as many of us know it as. A nasty little knock there from a share price that is much choppier, but still moving in the same direction. A very solid performer, of course, British Gas. No wonder it's doing so well given the cost of energy in the UK, but that's beside the point. Dropping back down from, we were 200p yesterday. We now find ourselves at £1.80 or so, don't we?
Well, profits were much, much worse than expected, and they failed, basically. And it's going to be interesting to see whether we can hold here or not, because we're basically testing the October and November highs, if I remember correctly. And if we can't hold here, given the strong candle to the downside, I wouldn't be surprised to see further days of declines in this share price here.
Centrica enters my hall of shame, because it's one of those companies that started turning its results into PDFs rather than just putting them on the LSE page, so it annoys me intensely. It's a list that gets longer and longer, sadly. Also point out this morning, FTSE 100, it's a whopper of a dividend day, whopper being a technical term we use in markets. A number of, I think it's about 29 dividend points being knocked off the index. Admittedly, it was a new record high yesterday, but if you are holding Imperial Brands, EasyJet, Games Workshop, GSK, Shell, BP, Barclays or AstraZeneca, most of which are fairly chunky dividend payers, those will be affected by the ex-div movements this morning, so bear that one in mind. That said, of course, as your FTSE 100, yet again, a new record high, which is it's becoming almost tedious in a way that it used to with tech stocks. But this index continues to march and march. 10,700 for the first time, given that we were trading at 10,000 just six weeks ago, I suppose.
Yes, it's a tremendous advance, especially for the FTSE.
And when you've got miners and defence stocks and others doing so well, banks, of course, it isn't surprising. And yet we're still trading at about 15 times earnings.
Which is half of what the US markets are like.
So if you're getting an index with momentum and you've got the value that goes with it, that will, I think, appeal to a lot of investors and traders around the globe. And again, there's your there's your run higher, which looks so obvious in hindsight. And hands up here, I was long the FTSE partly early in last year. I have, of course, got trackers and stuff, so I'm long anywhere in portfolio, but not through trading it. But it's just one that has continued to outperform. It is I think the worst start to the year for US stocks versus the rest of the world since about 1995 or something. It just continues to soar because you've got the FTSE 100 record highs, the Nikkei very close to record highs. Hang Seng is doing relatively well, although it's been closed, of course, for Chinese holidays. So just keep an eye on that. But FTSE 100 certainly marching upwards, and DAX was higher for the last couple of days, and that's had a nice bounce as well, hasn't it? So European markets seem to be recovering as well. Everything non-US, a year on from US exceptionalism, continues to do well.
Yeah, but talking of US, I mean, we saw the Fed minutes for January yesterday.
Yes, we should. Yeah.
They were quite interesting because basically, even though Donald Trump is putting a lot of pressure on the US central bank, the committee members are actually quite worried about inflation, and it seemed to be a more hawkish tone than what we were expecting. And that might actually have a negative impact on stocks today. Yesterday, they still managed to close in positive territory.
Yeah.
But that'll be interesting to see. And what is also interesting is that the impact on this on the US dollar has been quite strong, because if you look at my chart here, we did break through a downtrend line and we then accelerated higher on these Fed minutes. So the US dollar seems to strengthen, perhaps also because of these heightened geopolitical tensions as a flight to safety currency, which used to be traditionally the case. But we'll have to see whether we can continue to rise, because if the US dollar basket can rise above its early February high here, it wouldn't surprise me if we were to go back towards the highs from middle of January. So that could be interesting, and it could obviously have the effect on the euro coming off, as you can see here, falling quite sharply yesterday on cable and other US crosses, basically. So that'll be interesting to see. And now I think we are pricing in a 50% chance of seeing a 25 basis point rate cut in June of this year.
Is it still June?
I believe it's still just about.
June or July was the view. But yes, it's slightly more hawkish. But which shows you that even though he's going to get his man on the committee, it's not good. It's still a group of people that you have to sway. It's simply appointing a Fed governor that is viewed as being more pliable, shall we say, is not going to generate by itself rate cuts. Particularly because all the people that were also angling to cut rates because they thought they might get the job won't have got the job, so their desire to please the president will also have disappeared as well, which I wonder whether he's considered that particularly. But it's also notable, of course, the dollar doing so well in a week when the FT was reporting how everyone was bearish in the US dollar.
Yes, yeah.
So it's again the positioning. When everyone's one side of the boat and moves the other side, it often tends to see these rebounds. So that's definitely one to keep an eye on, as you say, with the geopolitical stuff, with the Fed, and with the positioning seemingly aligning for some kind of sustained dollar bounce. And the pound, obviously, you've had weaker inflation this week and disinflation in the UK, and prices actually fell month on month, which can't remember the last time we saw that.
Yes, may it continue.
Long may it continue. Yes, exactly. So still not doing particularly well. So those are the numbers this morning. Let's have another quick look at the fallers. I always forget to talk about the fallers. So Centrica, we talked about the fallers in one sense, because Centrica now down 9%, Rio Tinto down 4%, Antofagasta, Fresnillo, Glencore. I suppose commodities weaker across the board then this morning.
Because of the rising dollar, which makes sense. Well, actually, no. If we look at gold, that's
precious metals up and oil, but copper down. So this kind of continues what we saw yesterday, where you had a stock market rally, but also commodities, particularly oil and precious metals, rallying probably mostly on the Iran news, let's put it that way. And so to see them both happening, because if you thought oil was reacting to the CNN story about Iran, surely stocks should be concerned. So we'll see how if that begins to separate. But those are the movers in commodity markets this morning. So that's mostly dominating those on the downside. So Antofagasta, Fresnillo, Glencore, all taking a bit of a knock. Anglo American as well. Intercontinental coming off after its strong performance earlier in the week. So those are still the fallers. And then, as I say, Mondi, Relx climbing its way back again after taking an absolute knock, of course, over the past 6 months or much longer. So a brief bounce, but just nothing particularly impressive. So those are probably the numbers. Today's calendar, we have, if I can find my week ahead.
So we've got Eurozone consumer confidence at 3 p.m, US pending home sales also at that time, and then later on in the day at 5 p.m, the US EIA.
Yes.
Crude oil.
5 p.m, because normally when it's a day later, it's 4 p.m.
Exactly.
So I don't know why they're just deliberately mucking us around a bit with 5 p.m. Jobless claims, of course, at 1:30, and then 11:30 overnight, if you're watching these kind of things, Japanese inflation. Expecting to see actually inflation slow slightly. So that will be interesting for Bank of Japan that's still pushing towards beginning to or continuing to hike rates. So that's, and then tomorrow, I think we've got, oh yes, PMI day tomorrow in UK retail sales, so watch out for those. Plus, of course, perhaps the biggest data point of the week,
GDP.
US GDP.
Yeah.
So watching out. That's the first reading, don't forget, so that could be revised, but is the key one to look out for. I think that's everything for today. Thank you very much, everybody, joining us this week. We'll be back as normal on Monday. Thank you, Axel, as well. Sorry.